Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market, and I just wanted to do a quick video today because today is the type of day I like to do videos. And the market suffered a big drop today. The Dow was down over 500 points. Gold tanked, and basically almost everything was down. I'm not sure about oil or anything, but like gold, silver really suffered a downswing. And people attribute that to the higher than expected CPI number, which the month over month came around 4%. And the year over year was around, I think, 3.9% or 3.7%. Now I know, trust me, I know inflation's a lot higher than that, but I'm just basing it on government numbers on what affects the markets. You rarely see traders say, well, real rate of inflation, my pizza at Domino's went up 15%. That's real rate, which I'm not mocking that. Like that is true, but I stick with what moves the markets. And days like today showed that when it came to the rate hikes, Wall Street, all the bulls were saying, "Oh gosh, they'll have 6, 7 rate hikes," and I always thought they're overdoing themselves because inflation has not been subdued, and in fact, and if they want any chance of an economy turning around, they're going to need deflation. Right now, prices are too high for the average American, most people in America. And that's why you see commercial real estate doing poorly. You're seeing banks going under. New York Bank Corp, now they blame that on commercial real estate. But credit card debt, those bankruptcies are rising. Auto loans bankruptcies are rising. Now, they're not at the point where they're a recession, but they're rising, and they're going to continue to rise. And if you look at bankruptcies since there's a bankruptcy chart I look in Twitter, credit card and auto loans are just making a beeline upwards. And I think that will continue, especially with student loan payments resume. But what I think is going to happen is I do think more and more people will be forgiven on student loans. But today showed that the Fed is trapped. This is things, people have been saying this for a long time, but the Fed is trapped when they decide to artificially lower rates. They're going to have to let inflation run rampant, which I think they might. I don't know. Or they're going to have to, in order to conquer inflation, they have to be willing to crash the housing market. And I mean, stock markets, I guess that too. I don't know. I remember there's this Twitter account, QEfinity, and talked about, of course, with housing prices, stock markets, why don't they think inflation's low? And that's the thing. Inflation, at one point, when I was following the markets in the late 2010s and even early 2020s, before it really got to the public's attention, inflation used to be a sign of economic growth. I mean, people considered it. I never considered it a sign of economic growth. But a little bit of inflation, they always said, was good for the economy. So, but most people don't believe that now. But in order to kill the inflationary mindset, you have to be willing to crash the housing market. And the reason why I'm saying the housing market specifically, a lot of people say they have to let asset prices fall. You can have a rising stock market with a deflationary environment, the Gilded Age and whatnot. Now, there was a lot of fraud and there was bad times in the market, but the housing market is pure inflation. And the housing market, a lot of people have equity in their homes and whatnot, but it's getting to the point where there's many costs that deal with home. One is repairs. So if any type of repair and maintenance on a property, whether it's a store, electricity, among everything, those prices rise. Well, what happens when you buy food? If you have to do a lot of repair and maintenance for ovens and whatnot, like, going out to restaurant, that cost is passed on to the consumer. What about insurance? You have insurance for robberies. You have insurance for many things. Well, that cost is passed on to the consumer. Not only that, you have home insurance. So if those costs are passed on, rent. A lot of companies lease, and if the values are high, the leases will be high. And the other thing too is right now, I read somewhere half of Americans can't pay rent. I'm going to see if I can actually track that article now. Half of Americans. And if that's the case, half of Americans sorry, I'm trying to Google. If that's the case, then we're going to see a record number of Americans can't afford their rent as rent lawmakers are scrambling to help. Oh, they're paying a third of their income on rent. So if that's the case, they're going to have to greatly cut discretionary spending, whether it's going to Topgolf or it's going out to eat. Among other things, a lot of Americans are going to cut back. I've been cutting back on things myself. And if this is happening, inflation will lead to deflation. This is one thing people don't understand. Inflation always leads to deflation. In the 1970s, what happened, 82, really bad economy. Generally speaking, I can go back. I'm doing this video off the top of my head, so I can't go more, but that's the most recent example. So anytime you have inflation, you're going to have deflation to counter it eventually. But that's one of the things, is rent's getting too expensive. They're going to discretionary spending. And you can also see that this discretionary spending, because the other economic data piece that came out today was the NFIB Small Business Optimism Index. And that fell to 89.9, which could be high, but it's the lowest in 8 months. And this is just after the holiday season. So this should not be that pessimistic. Black Friday, a lot of the retailers, their year ends in March. So they probably are looking at the books after the holiday season, and they see maybe they're not, maybe they're still, they still need to get into the black. Maybe they're not in the black. So I'm talking about red, black, green. Green means profitable. That's what I mean. Maybe they're not in the black. Maybe that's why they're not so optimistic. Maybe they see the end of the year, they're going to be closing out. So that's the thing, though. But because they're on this policy of inducing asset price inflation, inducing stock markets, they can't crash the market. I mean, there's too much tax revenue. They derive tax revenue from stocks. They derive tax revenue from property taxes. So they're going to have to crash. They don't want to crash the market. And they believe, and there's a lot of people, especially boomers, who don't want to see the housing market crash. But the only thing is, these high home prices are impoverishing a lot of Americans. And the only way to, and you got to look at it, home insurance. Among other things, property taxes. I personally think a lot of people are going to start selling their homes also because if you look at it, people have a lot of auto loans. They have high credit card debt. Right now with home prices high, they have student loans. They're resuming payments. They might say, we have all this debt. At least we have some equity in this home. If we're able to sell our home, get a decent price, pay off our debt, and have a little bit left over and start renting, we can do that. And I think some people are going to start doing that. So, but anyway, going back just to close up, the Fed is trapped, and they're either going to have to lower interest rates and allow the markets to breathe. But what's going to happen? Inflation is going to rise significantly, or they're going to have to be willing to crash the market and squash inflation for good. And the thing is, it can't do that. Even if the president got reelected, they can't do that. But eventually, here's the thing. I was listening to Jordan Royburn in one of his videos. This is an older video, meaning 6 months, 7 months ago, or even 3 months ago. And he did a good history analysis of inflation, how it comes in waves. And the first wave doesn't really affect the stock market, but the second wave. So if they raise rates and crash the market, that will get rid of inflation and we can start over. But if that doesn't happen, the next wave of inflation is coming and the market's going down anyway. So in the future, the market's going down. When, we don't know exactly when, but if you look at it, those are only two options. And today also showed the Fed's also trapped. The reason market went down so much today was because of the increase in yields, the higher inflation. Yields increased. And the Fed, the only way it can defeat inflation is by crashing the market, specifically the housing market, but that will crash the stock market too. So anyway, I hope you like this video. If you like this video and watch this long, please hit that like button and subscribe if you already haven't. And I hope to see you next video.